Amazon, the e-commerce giant, recently sent shockwaves through the market with its latest financial update. Their latest earnings report fell short of expectations, causing widespread concern among stakeholders. This unexpected miss has sparked a flurry of activity among investors, leading to a volatile trading environment. Some investors are hitting the panic button, fearing further declines. Meanwhile, others see this dip as a potential buying opportunity, believing in Amazon's long-term growth. One thing is clear: this earnings report is a significant event that cannot be ignored. It's crucial to understand what happened and what it means for the future of the company and the market. Amazon stock took a noticeable tumble after the earnings release, reflecting investor sentiment. The market reacted swiftly and decisively, highlighting the sensitivity to Amazon's performance. This reaction underscores the importance of Amazon in the eyes of investors and its influence on the market. It's a bellwether stock, and its performance can influence the broader market trends significantly. This recent stumble is a stark reminder that even giants can falter and face price challenges. It's a wake-up call for investors to stay vigilant, informed, and prepared for market fluctuations. Let's break down the numbers and understand the broader implications. Amazon's revenue fell short of analyst estimates, which came as a surprise to many. This miss is significant because Amazon has consistently delivered strong revenue growth for years, setting high expectations. It suggests a potential slowdown in their core businesses, raising questions about future performance. Even more concerning was the miss on earnings per share, a critical measure of profitability. This metric is closely watched by investors as an indicator of profitability and overall financial health. The earnings miss wasn't just about the top-line numbers, it had deeper implications. It also revealed some underlying weaknesses in Amazon's business model and operational efficiency. Growth in their cloud computing division, Amazon Web Services (AWS), slowed more than anticipated, which was unexpected. AWS has been a cash cow for Amazon, contributing significantly to their overall revenue. This slowdown is a worrying sign for investors who have come to rely on its consistent growth, and it raises concerns about the sustainability of Amazon's growth trajectory. The stock market doesn't like surprises, and Amazon's earnings miss was a big one. The stock price plummeted in response. Investors were clearly disappointed with the results and outlook. The revenue shortfall and earnings miss were the primary drivers of the decline, but other factors amplified the negative sentiment. Concerns about slowing growth, particularly in AWS, weighed heavily on investor sentiment. Amazon's dominance in e-commerce and cloud computing has been a key factor in its success. Any sign of weakness in these areas can spook investors. Additionally, broader economic uncertainty and fears of a recession likely contributed to the sell-off. The big question on everyone's mind is, should you buy the dip? Amazon's stock price is down significantly from its recent highs. This drop presents a tempting opportunity for investors looking to buy into a market leader at a discounted price. But is it really a bargain, or is this a falling knife? There are compelling arguments on both sides. On the one hand, Amazon's underlying business remains strong. They are still the dominant player in e-commerce and cloud computing. Their massive scale and global reach give them a significant competitive advantage. Additionally, they have a history of innovation and expansion into new markets. Why Amazon still holds strong. Despite the recent setback, there's a strong case to be made for Amazon's long-term prospects. Their market dominance in e-commerce is undeniable. They have built a loyal customer base and a robust logistics network. This gives them a significant edge over competitors. Moreover, Amazon's cloud computing division, AWS, continues to be a major growth driver. While growth may be slowing, AWS remains the industry leader. They have a wide moat and a strong track record of innovation. This positions them well for continued success in the rapidly growing cloud market. However, it's crucial to acknowledge the risks. Amazon faces intense competition in all its major markets. Rivals like Walmart and Target are investing heavily in their e-commerce capabilities. In the cloud space, Microsoft and Google are challenging Amazon's dominance. Furthermore, the current economic climate is uncertain. Inflation, rising interest rates, and geopolitical tensions are all weighing on consumer spending. This could impact Amazon's e-commerce business. Additionally, there are concerns about Amazon and the profitability. Their aggressive investments in new areas, while potentially lucrative in the long run, are currently impacting their bottom line. Amazon's place in the future. When considering Amazon's future, it's essential to take a long-term perspective. Short-term fluctuations in stock price are inevitable. What matters most is the underlying strength of the business and its ability to adapt to changing market conditions. Amazon has a proven track record of innovation and disruption. They have consistently pushed the boundaries of what's possible in e-commerce, cloud computing, and other areas. This forward-thinking approach will be crucial as they navigate the challenges and opportunities of the future. To buy or not to buy, that is the question every investor faces at some point. So, is Amazon a buy after its recent stock crash? The stock has seen a significant drop, causing concern among investors. The answer, as with most things in investing, is nuanced. It's not a straightforward decision. There's no easy yes or no. Each investor must consider their own financial situation and goals. If you believe in Amazon's long-term vision and their ability to overcome current challenges, then the current dip is a great buying opportunity. Amazon has a history of innovation and resilience. However, it's essential to proceed with caution. Investing always carries risks. The risks are real, and the economic outlook remains uncertain. Market volatility can affect even the strongest companies. Don't let emotions dictate your investment decisions. Stay calm and rational. Carefully weigh the potential rewards against the risks. Analyze the data and consult with financial experts if needed. Consider your investment timeline and risk tolerance. Are you in it for the long haul or looking for short-term gains? Ultimately, the decision to buy or not to buy Amazon is a personal one. I will certainly be buying the dip. Let me know your thoughts on Amazon's earnings situation in the comments below. Also, subscribe for more in-depth analysis and investment insights.